Hi everybody, how are you? I hope you're having a good day. Today is a Thursday, October the 4th, 2007, and the purpose of this mortgage update is to talk about longer 40-year amortizations. I saw some reports recently that some people are still criticizing the longer amortizations, talking about the additional interests that you pay over the life of the mortgage. And I thought that would be worth addressing. The longer amortizations in Canada were introduced within the last year. The main insurers, CMHC and Genworth, are behind these. At first, it was traditionally 25 years would be the normal amortization, and then lenders have come out with up to 40-year amortizations on mortgages with as little as zero down. So why are people taking these longer amortizations? A report that was released recently by the Royal Bank of Canada showed that more than 50% of people are taking amortizations with 35 or 40 years. When the new longer amortizations first came out, everyone said, oh, you know, that's ridiculous. Who wants to have a mortgage for 40 years? Well, just because you take a 40-year amortization doesn't mean you have to have a mortgage for 40 years. The term of the mortgage is usually only a few years. The most popular term is 5 years. After 5 years, you can pay off the entire mortgage amount if you want to, and you can also accelerate the payments immediately after closing. Most of the lenders have prepayment privileges, so you can increase your mortgage, in some cases up to 15% of what you're paying. And you can also make lump sum payments each year if you do have extra cash. So hopefully down the road, when you're earning more money, if you're young and just starting out in your career, maybe just starting out and recently married or a young family, hopefully your income will go up and you'll be able to pay the mortgage down faster over time. But what the longer amortization does is both figuratively and literally gets you in the door, because then the payment is lower. It's maybe something that you can afford, maybe something that you can qualify for, because you know, even a reduction of $100 or $200 a month in mortgage payment could mean that you can get into the house that you really want. And let's face it, in Toronto, real estate prices have been going up and up and up. And some people have a certain type of house that they really want to get. They don't want to outgrow it. They don't want to get a house that in 3 years they're going to feel is too small. So it affords people the opportunity to get into a house that they would perhaps meet their longer term needs, and perhaps in a better area for them as well, which would also translate into more long-term value. So those are essentially the reasons that people are taking 40-year amortizations. And also, if you consider that the value of real estate goes up as much as it has over the last 25 years, on average, the real increase in real estate is about 2.5% per year. So if you consider that as well, buying a little bit extra house for your money could also give you good returns in the long run, especially if it's a more desirable house in a more desirable area. So that is the story on the longer amortizations. If you have any questions or comments, please feel free to contact me, send an email, or to respond to this email. And once again, have a great day, and thanks for tuning in. Bye for now.